Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Tuesday, October 28th, and my name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, including answering questions about the MAR ratio. He went over this in detail yesterday and got a lot of emails and comments asking to explain more about this and why it's so important. He's also going to share observations on A-line pullbacks and breakouts. He's going to review implied volatility and the impact that can have on your trading decisions. He's going to give some live examples of trades that are setting up and might even give us some debit spreads on those. He's also going to give us an update on small caps and how to trade them and the benefit of having different programs for the kind of diverse market conditions we are seeing. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, folks, also remember that the chat is open to everyone. And remember the ground rules. Always be kind and supportive in your posts. Keep to the topic. No political discussions allowed whatsoever. Also, folks, keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger is sharing, because after all, he's spending time with us to give us an edge in the markets and to become more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock for Roger's pre-market show, you'll note that there were several key catalysts that we needed to be aware of. On the tech side, we saw that NXPI was up 2%, ORVO was up 10%, and CFLT had earnings before the market opened. So a lot of focus there on tech. On the consumer side, Royal Caribbean was scheduled to give their earnings before market open. On the home builder front, D.H. Horton had their earnings coming out before market open. Transportation, UPS had come out and they were up 9%. And that was having a nice collateral impact as FedEx was also up significantly as a result. On the healthcare side, we saw that United Healthcare was up 4%. And on the Fed side, we have the Richmond Manufacturing Index coming out, as well as consumer confidence. I was concerned that these reports might be held up because of the government shutdown, but they were not. Now, as it relates to the small cap watch list, there were 5 tickers that Roger identified today: XHLD, FRGT, POLA, YMAT, and VSEE. Now, remember, with these folks, the decision to select these is not only based on price action, but also primarily on extreme volume. We're talking about volume that might be as much as 100 times what the normal volume for the small cap is. We only also want to consider trading these opportunities after the market opens. And if we don't see a setup that gets us into these trades by 2 p.m. Eastern time, forget about it. It's not worth the risk of getting into that trade. And oh, by the way, if you do get into a trade, never, ever, ever hold these overnight. So let me switch the screens here and let's take a look at how the small caps have performed for us today. Well, in the upper left-hand corner, you can see we have XHLD, and it did a nice job for us. It basically, the opening level was right at 64 cents, and we can see that we came up into this area and we bounced as high as 90 cents, if you will. So we saw a nice little increase there on that trade. That's a winning trade. We see it's falling off now. So for those of you that would have gotten in here, you're looking at about what, a 50-60% gain in that. So plenty of opportunities to take profit here before the sell-off. On FRGT, the target was $2.80. Hasn't even come close to that. On POLA, the entry target, $6.03. The market opened up and has just been moving sideways, nothing there. On YMAT, folks, looking at this, let's see here for a minute. What was the opener on this? See here. Normally, oops, I'm doing all kinds of crazy stuff with this now. Hold on for a second. Auto. There we go. The opening price was $4.93, and we can see that nothing happened there as well. And lastly, looking at VSEE, the opening price there was $4.03, and also nothing, just chopping sideways. So we did have one that basically hit its target, its level, moved in here, punched up higher, once again about 60% or so, and then has sold off. So good for that. Now let's go back to the main presentation here. And let's talk about the large caps that Roger focused on today. On the short side, he was looking at LI, BRBR, PGR, QFIN, MAN, and CBRL. Now, on the shorts, he did give a little bit of a caveat saying, guys, on the short side, these are good looking setups. But remember, the market's been reaching like all time highs. So you got to be careful when taking a look at these short opportunities unless you have a rock solid entry. On the long side, there were several there that you can see that were laid out. WEC had an asterisk by it. That's because Roger said, hey, this is looking like a decent A-line setup there on WEC. Same kind of a caveat. Be careful about these being overextended. And as a matter of fact, he made a point of saying that he selected these stocks because they did not appear to be overextended. So from that perspective, nice selection process there. He does not screen these for earnings, so you need to be aware of those. But what you need to understand about these stocks is that these are on Roger's watch list. And if they hit particular levels that he is interested in, if it hits those levels, more than likely that particular stock will end up being a recommendation that goes into the trading pit and potentially onto other programs. As far as Roger's pre-market comments are concerned, we did note that the markets were up across the board with the Dow leading. So once again, the futures, the Dow market was leading coming into the open. We also noted that volatility was low at its base, well below 17. And Roger wondered if it had the potential to even go lower or was it going to consolidate here and maybe move in the other area. He called that just a small red flag, but volatility was low. He also noted that the put to call ratio had normalized and was back near mid range versus where it was yesterday when it was very, very steep down in its range, indicating that the bulls were just running crazy. Okay. He knew that there was going to be a bounce back on that. As far as red flags are concerned, he said, look, the SPY, the QQQ, the MAGs, MHOs, they're still overextended. They're so high up in their range, they're well overextended, and that's a concern from him. I mean, from his standpoint, he really, as a technical trader, would like to see those fall back a little bit more, before considering entering them. So that's a heads up. The other red flag that he pointed out, and I thought this was very interesting, was that only 56% of the S&P 500 was above its 50-day moving average. And his point was when you consider that the market reached record highs yesterday, he would have expected this number to be more like 75 or 80%, not 56%. So that's a red flag. That means there's only really a handful of stocks that are really moving things with the bulk of the S&P. And we're talking about some big names, not quite there. So from his perspective, he said, folks, today looks like another profit-taking day, in particularly before the reports that were coming out at 10 o'clock. Wait for confirmation. Let the market show its hand as to what it's looking to do. And please resist fear of missing out. It's times like these when the market wants to seduce you into going long only to find yourself destroyed. Okay. So resist fear of missing out. Stick to your plan. Good time to take profits and wait for confirmation if the market shows itself. He also indicated that he does at this point in time have a preference for day trading the markets as opposed to swing trading, but he'll get into that more in his presentation. So today's agenda, once again, we're going to be answering questions about the MAR ratio. That was a terrific presentation that Roger gave on this yesterday. There were a number of questions that came into the mailbox and he wants to address them. He's also going to share his thoughts and observations on A-line pullbacks and breakouts. He's going to review implied volatility and the trade-in and the impact that can have on your trading decisions. He's going to give some examples of some good-looking trades today, and maybe if the setup's there, he's going to share a debit spread with us. He's going to give us an update on small caps and how you should trade those. And finally, he's going to talk about the benefit of having different programs for diverse conditions. So, folks, that's the agenda for today. We got a great group of people here. We've also got an excellent staff with us, and we're all here. And let me say hi to the folks. We've got Matt. Matt, great to see you, my friend. You're looking.
Hey, Raleigh.
Yeah, Roger, you're in the room here. And we also have Blake. Blake's going to be with us today. Blake Dirks is going to be with us, and he's going to be helping moderate this program. So, Roger, we got a full team and, a number of things. I know you got things on your mind with your mom. I hope that everything is going well there. And also, I hope that the markets are treating you with the respect you deserve today.
Thank you, sir. I appreciate it. How are you guys doing today?
Doing good. I'm doing great, Roger. It's beautiful here. We're starting to turn to fall. The temperatures tomorrow will be in the 70s. It's going to get into the mid 40s at night. So just a little chill in the air. It's a wonderful time of the year. So
We're
no
we're
issues
having
here.
we're having exactly the same thing happen. It always seems to happen right around Halloween, around my birthday, which is tomorrow.
Yeah,
So
that's right.
yeah, it's a very common occurrence. I always get the weather change, no matter where I lived in LA, here, everywhere. It seems to be right around the end of October. It seems to be that period of time. Matt, how are you feeling today? I know you weren't 100. I know Matt is working from his home. He didn't want to get me infected. He has a sore throat, and the last thing I need is a cold. I'm like an engine. I run. I can't be stopped, and I really cannot. Like when my daughter has a cold, my wife doesn't let her downstairs. We have a full living area here upstairs and TVs, and it's a big house, which we don't use. It's way too big for us since the two older kids moved out. But so she just hangs out here upstairs. I just can't afford. I literally cannot afford to get sick. So Matt is aware of that. Matt, you feeling okay? Is it getting worse?
No, I think it's just a cold. I'm
Okay,
feeling,
good.
yeah,
Well,
about the
colds
same.
are okay. Colds are okay. So let me just open up the chat and say hello to everybody real quick. Thank you, Richard. Good morning. I just opened up the chat for the first time. Let's just say hello to everybody. We got Stefan, we got Ivano, we got Arturo, we got William, um, we got Candy, we got Eduardo, we got Vernon, we got Cyrus, we got Tim, Mike, Sandy, Michael, Bull, Cyrus, David, Jill, Dr. Luke, user's here. How are you, user? Put your name there. It's so much more presentable. Kathy, Cyrus, Richard, Vernon. I'll give you guys an update on my mom. Actually, it's a pretty good update. I'll talk about all of that. Rich, and if you have a question about the MAR ratio, this is the perfect time to bring it up. I'll talk about all that. Tom, Vladimir, George, Armin, Bob, Steve. I'm about to close the chat, so this is the only fun I'm going to have with you guys before no soup for me. Raleigh's going to make sure it's off, and that's exactly what he should be doing because I love hanging out with you guys too much. Kathy, Andrew, Jeremiah, Willard, Louie, Rihanna, Wes, Phil, iPhone, Tinia, Sassy Trainer, yeah, Gina, Christopher, McCly, Matt, David, Stan, iPhone, hello iPhone, Don, Herbert, Frank, Wesley, Richard. That's right. Jamaica's having. I read about that
Oh my
yesterday. How
God, yes.
how bad? How bad is it? Does anybody know how
It's a
bad it?
category 5.
Oof.
Roger, it's as serious it gets. That means there's sustained 175-mile-an-hour winds, and it's just like destroying Jamaica. It's heading towards Cuba. It does appear, as far as the United States is concerned, it'll more than likely track out into the North Atlantic, into the Atlantic, and not really make any landfall. But that doesn't mean we might not get a lot of rain, like where you are in Florida and other places on the East Coast. But it's a bad one.
Gotcha. Gotcha. Understood. Ugh. Understood. That's terrible. Terrible.
Mhm.
Terrible.
Yeah.
The lady that I train with, my personal trainer, I see her twice a week. She's from the islands. I'm hoping she's okay. I'll see her at 4:30 today. Well, hello everybody. If I didn't mention your name, greetings, greetings, and greetings. Hello, hello, hello. Um, so my mom, real quick, I'll just make this real quick. My mom is feeling better. She is going to be discharged today. They actually gave her some real pain meds. They were giving her 1,000 milligrams of of Tylenol after a major back surgery, which made no sense to me, but they're giving her the good stuff now, finally. So she's feeling a lot better today than she was feeling last night. Last night she was just, it was bad. It was very bad. But today she's feeling a lot better, and she's coming home. My dad's going to be taking her home in the next hour or two, and I'll be going there after we are done with this class here today. So I will be tuning out a little earlier. I'm not going to be here till 4 o'clock. I'm actually going to be here till about 2:30, 3 o'clock, and that's that. As far as trades, a lot of folks closed out the Tesla in the pit. That remember yesterday we had folks who were upset that I closed Tesla too early, and I told them that I never pick stocks. I told you guys that I never pick stocks. Here, let me show you exactly what I told you. Here. Right here. Let me just walk you through this trade, okay? So I gave folks an entry. I gave them a very quick exit. And then I wrote to them, I never give a day trade without it being a good swing trade. Tesla is this is yesterday at 11:57 in the morning, okay? I never give never give a good day trade unless it's a really good swing trade. Tesla is an A-line, which broke out of a 3-week channel. And there's my graph for you. This is Tesla yesterday. See that? Not overextended. I do realize some of you are not ninja scalpers. Okay? But let's see what happened later. And Tesla, remember our entry yesterday? 455.85. And Raleigh, do you see where Tesla is right now?
Yeah. Amazing.
Okay. Do you guys see what I just said here? This is at 11:57 last night. I never give a day trade without it being a good swing trade. Tesla is an A-line which broke out of a 3-week channel today. All right, for all of you banana posters, okay, who made $9 on this trade. So everybody's a complainer. Everybody's a complainer these days. All right. By the way, yes, you have told us that many times. And I'm going to keep telling you that every time. You know why? Because it's 100% true. I don't know why my wife is calling me. She knows that I am that I'm
Well, if you
here.
need one quick little update I can give Roger on the
Yes,
small
please,
caps.
please.
On the small caps this morning, there were 5 tickers that you gave, and one of them, XHLD, basically, its opening level was 64 cents. It hit that. It went all the way to 90 cents. And so that was a 43% gain on that little small stock there. The other ones, just nothing burger right there. But for those that may have participated, it'd be interesting to see if anybody in the room took advantage of that trade at XHLD this morning.
Yeah. Let me just see what she wants. We were just communicating on Teams, so I don't think it's that important. If I would pick it up, especially with my mom, but I know everything's okay.
And as Herbert mentioned, unfortunately, it's turned around. But you would have along the guidelines that we provide, you would have been out of this trade before the turnaround.
Yeah,
I
would have been out. Well, what I would have done was this. I'll tell you what I would have done. Okay, so my wife's okay, everything's okay. What I would have done was I would have taken a profit and I would have put a stop loss at break even. That's what I would have done. That's exactly what I would have done. So Caitlin made money. Who here made money? A few people here actually made money. Jason scraped 18% on XG. Scraped it. And remember something else, Raleigh. You know what's funny? I'll tell you guys something funny. I was talking to David, the copywriter, yesterday about this, right? You're going to love this one, Raleigh and Matt. You're going to get a kick out of this. So I'm telling him, you know how we post the testimonials in the testimonial. So you guys send me testimonials. I take those testimonials and I post them in the testimonial channel. And then the copywriters, when they're writing promos, they take those testimonials and they put them in our decks. I'm pretty sure you guys have figured that out by now. I mean, this is not brain surgery. Right. But he thought this was the kicker. till last night, he thought all of these gains we've been posting, Raleigh and Matt, he thought it was on options. He thought it was on options. The leverage, because the gains are big, right? They're
Yeah.
not like 4%, 5. But they're not. They're all. I said, Dave, these are all stocks. I think one person took one option. The option made like 250%, and the stock made 100%. So he thought last night. He actually thought all of these were options. He's like, "You mean you're getting this on the underlying?"
Underlying, yeah.
I'm like, yeah, this is all. Most of these aren't even optionable. So that's whenever you can, surprise a copywriter. Usually the copywriters surprise us. Whenever you can surprise a copywriter, that's a very, very good thing. I'll just leave it at that. All right. So let me answer some questions. From yesterday about MAR ratio. Okay. So the first question was, well, Roger, what is a good MAR ratio? Okay. What is a good MAR ratio? Depends who you ask. It depends who you ask. If you ask Warren Buffett, he'll tell you 0.25, 0.50. What does that mean? That means basically they're willing to let their annual gains, average annual return, be half as small as the largest drawdown. What does that mean? That means, let's say, for every example, I'm just going to use 10 years, okay? So 10 years goes by, the average annual return is 12.5%. One time, there was a drawdown of 25% during that 25-year period, that 10-year period, and that would put our MAR at 0.50. Okay? If you look at the SPY, the MAR is 0.25. If you look at Warren Buffett, the MAR is 0.50. If you look at the best hedge fund trader in the world, if you look at an average hedge fund trader, it'll be 1. If you look at a small trader like me or Richard, it'll be 2 to 3, sometimes 4. Yes, you should always aim for a MAR of 2. You should always, especially if you're a small trader. And you know what's going to screw you over if you don't have it's the correlation. It's not your decision-making skills, it's the correlation. Because here's what's going to happen. You're going to get into a trade, and you're going to hold that trade. And then you're going to get into another trade, and you're going to hold that trade. And while you're holding those 2 trades, you're going to get into another trade. Those trades are going to have some degree of correlation. One of the times the market's going to take a dump or a gap down, assuming you're long, and you're going to find yourself where, whoops, I've got 4 or 5 stocks that are down 50, 60%. Now, if you have 2, 3 stocks and that happens 3 times a year, your drawdown is not going to get that far. But if that happens to you all the time, or if you have 5 to 10 stocks at a time and you're not holding a good long short exposure, your MAR ratio is going to get screwed. Now, it's not because they're bad traders that they have a 0.5 MAR ratio. It's because they're not allowed to go short. Capiche?
Okay.
And they don't get in and out of trades like we do. That's the major disadvantage of having your money with an institutional trader. They're not nimble. We can be nimble. I can get in and out of Tesla 5 times between now, like a lot of you do. I know you do because you tell me you do. Ken says correlation will enlarge swings. And that's how I knew. See, how did I know that Kathy Russell was full of it? Her performance was 3 times higher than everybody else. So what I did was I looked at her MAR ratio and I realized that her drawdowns are 3. And I knew she was caught red-handed. She was basically trading a triple leveraged asset. So you can't get the 3 times. Remember I always tell you it's a double-edged sword. If you have 3 times the gains, you're going to have 3 times the drawdowns. That's all she was doing. But folks who didn't understand drawdowns thought she was a market wizard because her gains were 3. She was like, my gains are 3 times bigger. Yeah. And then when the market went down, your losers were 3 times bigger. So the MAR ratio, what I'm trying to teach you is this. Don't ever listen to, I made 100%, I made 1,000%, I make 50% annually. At what cost? At what cost? I showed you yesterday how you could have taken something that made 12.5% a year average for the last 25 years, and you could have doubled it or tripled it or quadrupled it. And I showed you every time you did that, the drawdown would just get bigger. All you're doing is turning up the volume and turning it down. The record is already made. You understand? The decimal is what you're getting. The thumbprint of how much it goes up and down is already there. All you're doing is just up, down on the volume, up, down on the volume. And when people understand that, they don't have an aha moment. They have an oh shit moment, because they realized that all of these years since the day they started trading, they missed they missed the other part of the equation. Because you see, folks, let me explain something to you. And this is something you should really listen to, because this is really profound. There's only two parts to trading: positive expectancy and what is your MAR ratio. That's it. If you have a positive expectancy, then then all I have to do is turn up and down the volume and regulate your MAR ratio. So don't ever fall for the banana in the tailpipe. Don't ever fall for the banana in the tailpipe of some asshole telling you, I made 100%, I made 300%, I made 400%. At what cost? At what cost? How much did you have to risk to make it? What was your drawdown? You understand? This is, by the way, this is not something that you can argue about. This is not political. This is simple math.
Yep.
This is simple math, okay? Simple math. So unless you don't believe in math, this is simple math. You've only been told half truths about any. When you see those, do you remember back in the day? I don't even know if it's legal anymore. We used to see those Burger Fund annual performance 23%, but they never told you what the underwater part was. That's the problem. And if you knew how to calculate it, you'd be like, oh. Positive expectancy is for every dollar. Here's the formula for it. Here, let me go to here. It's positive expectancy is what you're trading. There it is. And it's expectancy equals probability of a winning trade and the average amount you win, subtracted from the probability of a losing trade times your loss rate. This is a mathematical formula. It's right here. You can go to Google, type in positive expectancy. So positive expectancy tells you, am I making money over time? Am I making money over time? And MAR ratio turns it up or down, up or down. That's all it does. There's two parts. You're either profitable or you're not profitable. And then how much do you want to leverage that? That's the only two parts there are, folks. All this stuff that we're doing, it's to accomplish these two things. Okay? Yeah, it's just a fancy way to measure your edge. That's all it is. That's right. If you have an edge. MAR ratio is useless if you're not profitable. So you need to have. Do you have positive expectancy? Is it above 1? And do you have what is your MAR? You understand? Think of MAR like a regular SPY and a double leveraged SPY. Okay, just think of it like that. The leveraged SPY will give you exact double the gain of the SPY, right? But it'll give you double the drawdown too, right? That's how the MAR ratio works. It's like, do I want a double leveraged, triple leveraged, quad leveraged? And all the traders are just telling you the upside part, not giving you the bottom part. That's all it is. And if you don't understand that, then you should have if you're understanding it, you should be having a oh my moment. Oh my, so from now on, when you're looking to invest with somebody, don't ask them what their return is. It's irrelevant over time. Ask them what their MAR ratio is. Mm-hmm. The MAR ratio will determine how much you make. Let me give you an example, okay? Here. Let me give you an example, okay? Here's a perfect example. Okay. Let's say, here, let me do this. Google. Here, let me show you. Maybe some of you are more visual, so I'll draw it out for you. Okay, so look. Fund A gives you 5% per year on average, okay? Fund B gives you 25% return on average, okay? Before this discussion, all of you would go with Fund B. It would be a no-brainer. It would be obvious. Now, let me give you the part that you really need to understand. Fund A has max drawdown over the last 25 over the last 25 years of 2.5%. Fund B has max drawdown of 50% over the last 25 years. So look, why don't I just take this right here? Right? Just take what I'm putting in right there and multiply it times 5. Fund A leveraged 5 times equals 25% return, drawdown of what's 2.5? What's 2.5 times? It's
times 5.
12.5. 12% return. 12% drawdown. Max drawdown over the last 25 years. So you see how. When you just had this part, you obviously thought this was better. But when you have both of these parts, you could see that here you lose 50% of your money temporarily. Here you lose 12.5% of your money. But if I buy and hold, you don't understand, LD, what I'm saying. Send me an email. I said when you're about to get in, this is data for funds when you're about to buy. You haven't held anything. You're making a choice. And you go into Fidelity, and the Fidelity guy says, "Would you like to buy Fund A or Fund B?" And you say, "How much money does it make?" And they tell you one makes 5%, the other one makes 25%, and you all put your money in Fund B. But what they don't tell you is the other part of the equation, and that's what the MAR ratio tells you. Hey, Fund B lost 50%. You're going to have a drawdown. You're going to go underwater of all of the money that you have at any given time of 50%. And in the first one, you're only going to go underwater 12.5%. If you guys don't think that's important, then there's nothing here to talk about. I did, Cyrus. That's why I multiplied the first one times 5, and I multiplied the drawdown times 5. I did it the same way. No, it's just leverage. It's just leverage. You're just using 5 times as much money. That's all. You're just turning up the volume. You're not changing anything you're doing. Folks, that's reality. So you know what you're actually risking. You understand?
Exactly.
What this is. When you're going on a roller coaster, do you just want to know how fast it's going, how high it's going to take you, or do you want to know how low it's going to take you to? See what I'm saying?
And Roger, for people that are sitting there wondering, man, how can I calculate my drawdown and MAR ratio in my own trading? I know that when I first got into this, Roger, and I was using a trading log, as I always do right now, it calculated that for me.
It's automatic.
I didn't have to know the formulas or anything along those lines. It just basically tracked and told me everything I needed to do. So that's just a plug For those of you out there that may not be journaling your trades, you need to be journaling your trades.
MAR ratio 2, MAR ratio 0.50. You could answer just what Jay Lernstedt, my answer there answers your question, okay? jllearnbellsouth.net. I just answered your question right here. Just plug these two equations into this and you'll figure it out. Simple math. Okay. Hey, Matt, how are we doing on that S&P position? Are you still in?
No, we've been out.
Did you take a profit or a loss?
We took profit.
How much did you make?
17 cents.
Better than a sharp stick in the eye.
Yeah, well, the vol we got out before the big slide down because the
I
vol
understand.
started turning.
I got you.
Good move, Matt. Good job.
Move. Yeah. Good job. Okay. Jason, Trading Sync is very good, and there's one that Matt and I are going to start testing. It's called TradeViz. I think it's called TraderViz or TradeViz. And the reason I want to start playing with it is because it supposedly has what if scenarios for exits, and I really, really like that. And actually, funny enough, that you mentioned it, I was just talking to Matt about it last night and this morning. We were just having that conversation. So your timing is actually pretty interesting. One is called Trader Sync, and the other one is a trade or trade. Matt, is it Trade Viz or is it Trading Viz? Or hold on, let me look it up. I don't want to confuse you guys. It's a good question. I was just looking into this yesterday. Trader Viz. I think it's called Trades Viz right here. And here's why I was looking at it. I was looking at it because I'm looking for something that I can upload an Excel spreadsheet. Number one, and I think this can do it. And two, this was really cool. I was just playing around with this, and I was telling Matt. I figured since I was doing it, I might as well share it with you because you guys are always curious about what I'm scheming. Exit analysis right here. So check this out. Again, I'm not an affiliate for this company, but what this can do is they could look at best exit time, best exit efficiency, and they could literally lay it out for you. So I want to take all the trades in the Pro Trader Dash in the pit, and I want to put those trades. So I see here best exit for options, and it's got like all these different exits you could run. So I was showing that to Matt yesterday, and he's going to start doing some research. What's my favorite type of soup? I like bean soup, and I like chicken noodle and wonton. Yeah, it does everything, but I don't know if it does that exit analysis. I just don't know. I don't know. I know we have it. I just haven't looked at it yet. But I started looking at this one because it can input Excel spreadsheets, and I need to input something within Excel spreadsheets. Okay. The second thing I want to talk about is some folks asked me about the small caps.
Yep.
I'm going to go out of order, Raleigh, on our agenda. Problem. I'm going to go with the update on small caps and how to trade them real quick. Okay.
Yep.
So real quick. One second. I really like this stock a lot. Anyways, we'll talk about it in a second. So let's just really quickly look at the small caps, okay? Let's take a look at XHLD, okay? That's that stock that we were looking at earlier today that some folks made money on. So number one, the first thing we do is we look at the pre-open, the market pre-open, and we set our levels, okay? Okay. So in this case, our level was 65 cents, okay? It opened at 49. It gave you plenty of time. Notice it started breaking out afterwards and it started coming over here. Okay. The best thing to do is once you get out of your trade, unless you've taken like 100% or 200%, like a windfall profit, but if you're getting the typical 18, 20, 30%, which is quite a bit because this is the stock itself, my suggestion is once you take a profit, put your stop loss on the remaining position. Take like 50, 60%, okay? And then on the remaining position, put your stop loss at break even, okay? Very, 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 very important. Also, in the next couple of days, I'll show you how you could trail it. We've done it before, but I'll show you how you could trail it using ATR. Okay. But for now, just know that take half of the position at your 15 to 20% profit and put a stop loss on the remainder, 1 cent or right at break even, okay? And let the remainder ride. And that way, if it falls back, you're not going to lose any of your hard-earned money, okay? How many contracts should you get, Eduardo? That's another good question. Well, first of all, you're not buying contracts, you're buying shares, okay? And the way I would that's actually a really good question. The way I would do this, I would use fixed ratio, okay? In other words, the fixed ratio in this particular situation, the fixed ratio is a percentage of your account. So in other words, if you're trading, let's say you're trading 3 of these small caps, okay? Hypothetically speaking, you should only be in one at a time. But if you are in that situation, you want to limit to, say, a percentage of your account. So for example, let's say you have a $10,000 account, okay? I would take no more than $500 worth. Okay, you want no more than 2%. Okay, so $500 worth, and that's assuming the whole position is going to go to zero, right? So, but make sure you keep all of your purchases at $500 or all of them at $1,000. Don't try to be creative. Okay, in other words, you don't know which stock will go up, which stock will go down. If these were large caps, I would give you a better way of equalization using volatility. But because they're small caps, you just want to buy. So in other words, if a stock is 50 cents and you want to spend $500 worth, you would buy 1,000 shares. If a stock is $5 stock and you're going to spend $500, you would buy 100 shares. You guys understand? Really, really simple.
Makes sense.
So yeah, so I wanted to give you those updates. Wanted to kind of give you those updates about that. Now, another thing I want to do is a few folks asked me some questions about like Richard. He used $2,000 for every trade for the longest time. That's how much he would spend. So, God forbid, it went to zero. The world fell apart. He would lose $2,000. Okay, on any one position. It's a smart way to go. Richard, I think you're at 3 now, if I'm correct. I think you're at 3. What is the link to the support call that occurs? Joe, Raleigh will give you that. Yeah, Richard now is at 3. Okay, which is good. He stayed at 2 for a long time till he got nice and comfortable being there. Yes, Herbert, you should have been out of XHLD for a very long time. There's absolutely nothing to talk about right now. You get in right here at 65 and you get out at, it went up to 85. It actually went up to 89. So yeah, you snooze, you lose. These are very quick. These are very quick trades. You can't, it's your fault. It's not your fault. It's okay. It happens. Exactly. You don't want to go crazy. Okay. So the next thing I want to talk about, and a lot of folks are still having an issue with this, is A-lines. They're having a very difficult time understanding the difference between A-lines and which are pullbacks and breakouts. So I'm going to explain to you a few, okay? All right. So let's take let's take Pan W. Okay. Pan W right now is breaking out. Folks, if and please you may want to take notes. If when you're entering, you look to the left and you're above the recent swing high, which is right here, that cannot be an A line. It's impossible for that to be an A line, okay? Okay. Do you see where you see where the swing high is right here? Do you see it right here? Do you see where your entry would be? That's an A line. The previous high, first of all, it has to be there within the last week or two at the most. And 2, it has to be above the last high, which is right here. So this is a breakout, okay? That is a breakout. Okay, that is a breakout, and this right there is a line. Okay, do you guys understand that? If you don't understand that, now there are two type of A lines. Okay, good. Cyrus understands it. Tammy understands it. It was a line but turning into a breakout after it kept going. Yes. Yeah. Yeah. Good point, Bill. Good point. So this was an A. So this right here, you see this bar right here, or even this, or even here. That's when Pan W was an A line. And as a matter of fact, you might have remembered over the last 2 weeks ago, or anybody in the pit channel, I've been adding it to your watch list consistently. Okay, right here. And I was telling you it's an A line. I remember we had it on this show a couple of weeks, not even a couple of weeks ago, last week, and I was telling you it was an A line when it was right here. So when it was here, it's an A line. But then here it's a breakout. So see that to the left? Nothing to the left. It's a breakout. So this it really is a very good example. Let's see if we could find. Okay. Swing highs over here, right? When you look to the left, there's something immediately up here. That's an A-line type of setup. What is the percentage of A-lines that break out? I've never, I can't answer. It's a good question. I can't answer that question. But if I had to guess, I would say about 75%. Okay.
It's really ticker dependent. I mean, it's what you're looking at,
Yeah, I mean, I don't. I mean, I could lie to you and tell you a number, but I'm not going to do that because I take my profit way before it becomes. See, if I took my profit at the breakout level on the A-line bill, then I could tell you that number just by looking at my A-line. But I usually get out of the A-lines way before then. So I could. So okay. How about this? Let me give you a better answer. Okay, halfway between our entry and the breakout level, I would say it's 80 to 85%, and I could tell you that with a great degree of confidence.
Mm-hmm.
One of the things about me, I'm not a big talker. That's why that guy really offended me in the morning the other day. Says too little about something. I'm not. If I don't know a lot about something, I am not going to talk about it. So I'm telling you that the halfway point, based on thousands of trades, or at least close to 1,000 trades, is about 80 to 85%. But I will tell you that there's no way, heck on earth, that level is that high when you start approaching this level over here. If I had to put money on it, I would say about 70, 75%. And I could say that with a great degree of confidence. Does that answer your question? I hope so. Russ, let me ask you a question, Russ. Do you think it's appropriate to post trades that we currently have in members area where people pay money for publicly here in front of 500 people? Do you think that's a smart idea, Russ Davis? Okay, please don't ever do that again. All right. I have a perfectly good email address, and I'm not afraid to use it. Okay. All right. Where are we? So, okay, now that we passed that part, let's talk about oh yeah, implied volatility. Okay. Implied volatility. A lot of folks, I've been getting a lot of emails, Raleigh, about time spreads.
Mm-hmm.
A lot of emails about time spreads.
Why.
Well, folks have been. Well, first of all, folks have been taking them on their own. They've been doing flying kamikaze, but at least they have the tools to use. And you know what they've been telling me? They've been doing really well. So I'm not surprised. It's not a big surprise. If you weren't doing well, I wouldn't have published. I wouldn't be doing them every chance I get. and I do them every chance I get. So, what you guys are having trouble with is everything I do is based on technical analysis, right? It's all, charts. And so when I tell them that there's only two factors to time spreads, they keep asking me over and over again, but what about the chart? Don't you need the moving average? Don't you need the trend? No, we don't need any of that. Matter of fact, I don't even look at the technicals at all. I look at two things: the difference between the implied volatilities. I want to see at least 50% difference, 40, 50% difference. I want to see tight spreads, so it's not hard to get out of, because I don't want to get 100 emails saying, well, I can't get out because the spreads are, I don't want to deal with that. And two, I look at how many times, most importantly, how many times it failed the expected move. That data you cannot find anywhere, and I dare you to tell me where you can find it, because you can't. So that is the only two pieces of information you need. Now, I want you to understand something. If comparing the implied volatility, you could do that just by opening up an option tab and understanding basic division and percentages. But that other number, that how many times it underperforms, that thing is not easy to get. Just because I have it in there doesn't mean it's easy and you should be using other things. No, that thing is it. And it's really hard to get, and it's very, very useful because it's telling you historically how many times though the stock was expected to move 10 points, but it only moved 5 points. And that's where the money is, you see. So you don't need to look at technicals. Technicals will not help you. Now, another question I got on the time spreads. Why do I always do, if a time spread is a non-directional strategy, okay? If time spread is a non-directional strategy, then why am I not using puts? Why am I always using calls? That's a great question. I'm surprised only 2 people asked me that question. Okay, but I'll give you the answer, because implied volatility is always higher on the call side than the put side before earnings. It always is. So you have that disparity, so you end up paying less. Okay, so really, really important, important answer. Okay, and let me just answer a couple of questions here. Gene says, how do I get out of credit spreads? You get out of credit spreads. You get in with a credit spread with a credit, right? You get out of it with a debit. You undo what you did. Basically, remember, you sold an option and you bought an option. Well, now you're buying that option that you sold, and you sold the option that you bought. Okay? Unless you get exercised. If you get exercised, you're going to have to press the auto exercise button. You could always send me an email. I'll help you with that. Michael says, Google has high implied volatility with earnings this week. How many days before expiration would you do a calendar spread? The calendar, it's not how many days before expiration. That's not how it works, Michael. The expiration is always the same week of earnings. If you don't have weekly options, then there is no calendar spread. Calendar spread is only good for weekly expirations. Number one. Number two, we don't care about what day it's expiring. We care about the fact that we get into it as late as possible before earnings comes out. In other words, if earnings are coming out tonight, we get in tonight. And if earnings come out tomorrow morning, we get in tonight. So you're always getting in at the last possible moment. The options are open. In other words, a couple hours before the market opens on the day before the earnings are released. And whether the earnings are released that night or that morning is completely irrelevant. Okay? All right. All right. Now, Raleigh and I were told that people are still asking a lot of questions, and I mean a lot of questions about the webinar that I've been giving you guys on Saturday.
Yeah, we launched it Saturday. Yep. Yesterday.
Saturday and Monday, right? Yeah, Saturday and Monday. So Raleigh and I are going to do it again. It's going to be the last time we're doing this, and this is going to be the last time we're doing this. Let me just unshare my screen real quick. If you folks have any other questions about the topics that we're covering right now, and I do mean this, please, please, please watch the video. Watch the video. You got to watch the video. It's very important. And then what you want to do is you want to send me an email. And once you send me an email, I will answer that email, or Matt will answer that email with any questions that you may have. Just give me 1 second. Let me get this thing here. Let me get this thing there. Boom. Here it is. That's what I was looking for. Okay. Can you guys see my screen okay?
Mm-hmm.
All right. Now, folks, if you haven't been here the last couple of days, please pay attention. This is really, really important. Oh, you know what? Let me give you my watch list before we begin this. Let me give you my watch list. So, I'm going to just give it to you in the chat, okay?
Okay.
I'll just give everybody in the short side. Here's the watch list. Lee, TUBRB. Oh, wait a minute. I'm giving you the wrong watch list. I'm giving you morning's watch list.
That was from this morning. Yeah.
Yeah,
exactly.
you don't need that. EFX, Urban, BMY. Remember, I'm not screening for earnings because A, time spreads, and B, you guys are renegades. A lot of you don't listen to anything I say and initiate during earnings. I still don't know why, because time spreads are so much better, but I guess it's old habits die hard, as they say. We took a little bite, by the way, I forgot to mention, we took a nice little bite out of APLD this morning. If you guys made money on that, please let me know. I like that stock, and I also like SMR quite a bit, and they're both on my watch list, actually. SMR, APLD, GE, UEC, Intel, Tesla is still on my list, still not overextended. PanW, DD, GE. That's my watch list, and I'm sticking to it. So you guys can just grab it from the chat box, okay? All right. So Raleigh, are you ready, my friend?
I am ready to go. And once again, Roger, I'm delighted that we've got Blake here with us because he's going to be in the background. He's going to be moderating. And so, folks, if you've got questions during this presentation, put them in the chat panel. And Roger and I are going to address those when we're done with this presentation. If there's questions that you have that Blake can answer, he'll do that live in real time. Hey, Blake, good to see you there, buddy. Yeah, Roger, let's rock and roll.
Hey, Blake, how are you?
I'm doing pretty good, Roger. How are you?
Good. Yeah, actually, I'm doing pretty good. I'm happy my mom is coming home. I'm really glad about that. I was last night when my wife told me she was in pain. I was
That's
not in a
horrible.
good place. Yeah, when you love somebody and they're in pain, and
I heard pain and Tylenol. I'm sitting there going like, Roger,
right. Thank you.
Let's go to the hospital now.
Like what the
Yeah.
what are you people insane? Like
and back surgery.
Back surgery.
Yeah,
surgery. Yeah. And they said it was worse than they expect. I mean, they didn't know. They told my mom. Well, they told my dad. They didn't tell my mom. They told my dad that they were shocked at how bad it was, and they couldn't understand how she was able to walk on her own for the last year or two.
Nice.
They were all dumbfounded. They were like, this woman has been like. So this, I guess she was just procrastinating, hoping that, anyways.
It'd get better. Yeah. Well, I was praying for her. She was in my prayers. So I'm glad it all
Thank you. I
worked
appreciate it. I really do. Yeah. Like, my mom is like, she is just the most amazing person I know. She's just the best. And I really mean that. Everybody loves my mom. Yeah. Sorry, I don't mean to get off topic, folks, but let's get in on this. This is exciting. This is new. A lot of folks have been really liking this, and thank you for the nice words. And I guess I got a nice birthday wish. My mom is feeling better, so
yeah,
I'm already there. All right, Raleigh, let's do this.
Let's go. Well, folks, before we get into things, we need to let you know that we develop tools and strategies to the best of our ability, but no one can guarantee the future. There's always a risk of loss when trading, and past performance is not indicative of future results. What you will see here today are some of the best examples over the last few months across all of the public trade research services. There are bigger winners, there were smaller winners, and of course, there were losers as well. You need to trade at your own risk and see our terms on the Trading Pub homepage for more information. And folks, once again, let's be real. We all know that there will be losers in trading. There is no black box miracle system, and Lord knows we have tried to find it, but it's not there. That prints out winning trades automatically. The whole purpose of our research and work with traders to help give them and you an edge in the markets. And if you can't handle a losing trade, and that's something that we all deal with, then you really shouldn't be trading with real money yet. Again, losses in trading have occurred and they will occur again in the future.
100, couldn't have said it better myself.
Now, for those of you that don't know who I am Raleigh White. I'm the senior moderator and trade show analyst. And Roger, that picture blows me away. I mean, it looks like I am ready for action. And I actually do look like that from time to time.
You do look like that. You look, that's you. You look great, man. You look it looks like you've got a big secret and you don't want to share it just yet. That's what you look like.
There's a name for that grin. Okay. Anyway, today Roger and I are going to tackle some of the most important questions in all of finance. Questions that can make or break an account. And this is an invitation-only event just for students of Roger. It's not yet open to the entire public, and it won't be shared on social media. So from that perspective, folks, we ask that you don't share this information outside of this group because we wanted a chance to show it to the active students first before anyone else. Now, if you've been following Roger for a while now, then you probably